The local share market moves towards an all-time high, outperforming most other bourses. Anthony Albanese tests positive for COVID, throwing Labor's plans into disarray. And why lunch at the pub is about to cost more. It's Friday, the 22nd of April, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. These short weeks, Friday already. We had one last week. We've got one this week, another one next week. I kind of like it.
You know what, though? It doesn't really feel like so much of a short week when we're still producing podcast episodes. You'll still hear Fear and Greed pretty much right throughout the all long weekends. We're just here every day. We are absolute troopers, aren't we?
We love it. We absolutely love it. And in fact, if listeners want to find out why you and I particularly love it, well, why don't they listen to Safe Word? Because we go into some discussion about when we did work experience for me many, many years ago, and fewer years ago for you, but we just talk about our first work experience in journalism and kind of why it led us to where we are today.
Yeah, and of course, as it often does, though, on Safe Word, we do end up in a slightly different place to where we started, and I think it ends up with a bit of a gripe about parents ringing up to arrange work experience for their on behalf of their kids. So, look, you can find Safe Word basically wherever you listen to podcasts, but you have to search for it. You've got to search for Safe Word by Fear and Greed. Make sure you hit subscribe or follow so you get the new episode every Thursday when it's released. So a new one came out yesterday. Jump on that one today. You will not regret it. And as well, stick around after this episode today for Sean's chat to Lawrence Patrick, cybersecurity expert with Zarrilio. And you talk all about the dark web, Sean.
Yes, I've heard of the dark web, but I didn't really know much about it until I chatted to Lawrence. It's good fun. I think it's a bit scary, but good fun.
Yeah, it's a little bit confronting to realise just how much money your personal details can fetch on the dark web. Absolutely. And he goes into all of that, so it's a great chat. Anyway, let's talk about the share market today because that is the main story this morning. It traded above 7,600 points yesterday for the first time since August last year, and it's now just a touch below its all-time high.
Yes, Michael, the market hit a high of 7,605 points yesterday before falling back below 7,600 in the last couple of minutes of trading. It's now just 41 points below its all-time high of 8 months ago. In percentage terms, that's about 0.5%. Now, the S&P ASX 200 has been a very strong performer, particularly compared to global markets this year. The local market is basically flat for this year. Compare that to the S&P 500 on Wall Street. It's down 7%. In Europe, a measure of the largest 500 stocks, that's off 6%. Japan's market is down 6% as well. The Hang Seng in Hong Kong is off 12%. The outperformer is the FTSE in London, which is actually up nearly 2% this year, better than the local market. Both Australia and London have done well for exactly the same reason. Both bourses contain many, many commodity companies.
So really then higher commodity prices feed through to higher share prices for many industrials and for many miners. So that's really why the ASX has outperformed.
Exactly. Market leader BHP is up 20% this year, notwithstanding a bit of a fall yesterday. Rio Tinto's up 17%. Fortescue is up 8%. The oil and gas companies, they've done the best. Woodside's up 45%. Since January 1, and Santos is 27% higher. Goldman Newcrest has risen 17%, and diversified miner South 32 has jumped 26%. These are all big companies on the exchange. They're all top 30 companies. So when you're getting big jumps in share prices in those companies, it's not surprising the ASX is outperforming.
So it's been a pretty good time to invest then in Australia.
Sure has. That doesn't mean it's still a good time to invest, but the local bourse has definitely outperformed other global indices.
All right. Any other notable moves that we should know about in the local equity market yesterday?
It was actually a really busy day. Now, the market itself closed up 0.3% to 7,593 points. The banks all did pretty well, and the financials generally led the market. But it's worth pointing out a few announcements yesterday. CSL said it had raised $4 billion over the past couple of days. The blood plasma giant is using the money to buy Vifa Pharma, which it announced late last year. Annuity provider and fund manager Challenger said its profit this financial year would be at the upper end of its guidance range, sending its share price up more than 10%. Now, Challenger's had a pretty hard time of it. thanks to low interest rates. Selling an annuity is much easier when rates are higher. Not so easy when they're at all-time lows. With rates rising, things might be looking up for Challenger. Its funds management business has done pretty well as well, though slowed somewhat during the March quarter. And Viva Energy, the petrol refiner and retailer, said sales volumes jumped sharply in the March quarter thanks to the easing of restrictions. Basically, people were moving around much more and they needed more petrol. Its share price jumped 5% yesterday to hit a 3-year high. Now, Michael, at the other end of the spectrum, tech group Megaport's share price fell 20% on a lacklustre market update. Megaport, I just like saying the name, it's such a good name for a company. It provides connectivity services for networking and cloud computing. It has definitely had a hard time of it. Its share price has halved since late last year. And I can't go without mentioning the Aussie dollar. It's trading around 77.4 US cents. Gold's at about $1,950 US dollars an ounce. And Brent crude is back below $110 US dollars a barrel.
All right, we'll be back in a moment with the rest of the day's business news. Sean, I was preparing for a fairly standard election campaign update, but last night, opposition leader Anthony Albanese tested positive for COVID, throwing the whole Labor campaign into complete disarray.
Yes, he sure did, and it sure did. After a pretty solid performance in his debate with Prime Minister Scott Morrison on Wednesday night, which kind of got his campaign back on track after some early stumbles, Labor didn't need this. Mr Albanese tested positive after a routine check, and now he has to do the campaign virtually. It's more bad news for the opposition. Now, on to what happened yesterday. The fallout from the debate on Sky on Wednesday night was hard on the Prime Minister Scott Morrison, then Albanese. Morrison, who spent yesterday in Queensland, was forced to apologise for his statement that he was blessed to have children without disabilities. Australian of the Year, Dylan Alcott, a wheelchair athlete, took issue with the comment. He said that he thought his parents were blessed to have him as a child. The Prime Minister also faced questioning about when he knew of the China-Solomon Islands Security Pact. The government has been criticised for allowing that to happen. Now, Albanese, ahead of his test last night, spent much of his day in New South Wales. While he was pretty critical of the government's role in the Solomon Islands deal, he did say that Beijing will be a problem regardless of which party wins government. Now, of course, Labor does not want to look soft on China at the moment. It had been a pretty lacklustre first couple of weeks of campaigning until last night and the COVID test. There's really been no major announcements and plenty of re-announcements and small spending initiatives. As we head into the weekend, polls have Labor in front on a two-party preferred basis. Albanese certainly did better this week, highlighted by the Wednesday night debate, though Morrison really did show what a good campaigner he is. It'll be interesting to see what happens over the next few days when Albanese is limited to virtual appearances, while, of course, the Prime Minister will continue running around the country.
Yeah, it's certainly changed things up a bit, hasn't it? Now, the prudential regulator, Sean, has given some guidance around regulating cryptocurrencies.
That's right. Now, I think regulation is a dirty word in much of the crypto world, but it's now too big to escape the eyes of the Australian Prudential Regulation Authority. APRA said it expects the financial services industry to consult with regulators before pushing into crypto assets. It wants the industry to conduct comprehensive due diligence, understand the risks, and tread warily. Now, what's interesting here is the first time the regulator has set out any principles guiding the asset class. That in itself gives the asset class legitimacy. Chair Wayne Byers wants to regulate the sector by 2025 and is worried that some crypto assets present significant operational investment and credit risks. All that is well and good. What this really shows, though, is that crypto is shifting towards the mainstream. Not there yet, but shifting towards it.
All right. Now, BHP's share price, Sean, fell nearly 3% yesterday after lowering its forecast for copper and nickel production.
Yes, it's easy to forget that the big Australian does much more than mine iron ore. At the moment, iron ore produces most of its revenue, well, the largest chunk of revenue anyway. But BHP is also a global player in copper, in nickel, coal, oil and gas, for the moment at least, and even potash. Yesterday, the miner said it expects to deliver less copper and nickel than previously anticipated due to workforce issues related to COVID-19, social unrest close to some of its mines, and workforce shortages. Now, before you ask what the social unrest is, it's actually protests near its Escondida mine in Chile.
Yeah, you just beat me to that one, Sean. I was about to ask you about it, but I will not ask you again to pronounce the name of the mine. I think you did very well to get it to get through it the first time. But we mentioned at the start of the show a story that worried me a little bit when I heard it, that Endeavour Group, which owns liquor outlets and a bunch of pubs, are going to put up the price of a pub meal.
The cow lunch or the steak at the pub or whatever you like is going to cost more. Endeavour runs 344 hotels as well as the Dan Murphy's and BWS liquor chains. As a result of higher red meat costs, it came out yesterday and said prices are going up. Now, that hasn't deterred patrons. In fact, patrons are pretty excited to be out and about again after restrictions have been lifted. Endeavour's hotel division for the first 3 months of the year is up about 4% in terms of turnover. That's about $400 million. In contrast, the liquor stores that, of course, did well during COVID have fallen back a bit. The upshot of all this, people are going to the pub more, and they are actually prepared to pay more for a pub meal.
Sean, have you noticed with the pub meal how good the chips are with pub meals these days?
Yes.
I reckon that has been the number one thing that has revolutionised pub meals of late, probably over the last 10 years, is just how good the chips are. I mean, obviously, I do kind of feel like you might be the kind of person that requests a salad instead of the chips.
Well, actually, I don't eat chips. So
hang
you're kind
on,
of right there. You are kind of right. But I think we've gotten so used to the McDonald's fries style chips. Now pubs are bringing back the thick cut chips. All of a sudden, they're very, very nice. They're very, very tasty. I agree that I think they're really bad for you though, Michael.
I'm sorry. I am still reeling from the admission that you don't eat chips. I wish I'd known this when we first started to work together. Fear and greed might never have existed.
Oh, well.
Now, Sean, you seem to get very excited about a number of things. Often they're quite unusual things. And one of those things that you get excited about is pallets. You know, wooden pallets that are used to transport stuff. And somehow you keep finding a way to work mentions of pallets into Fear and Greed, but apparently there's a shortage of them.
Yes, Michael, this is a great story. You know, the world's biggest supplier of pallets is Brambles, which of course is listed on the ASX. There's plenty going on in the pallet world. There are supply chain pressures due to the war in Ukraine. Timber prices are high, pretty much for the same reason. In fact, the price of timber for pallets is now at a record high. Demand is really strong as global economies pick up, and retailers are storing stuff because they're worried about supply chain disruptions in the future, so they need lots of pallets to store stuff on. At the same time, people aren't returning pallets like they used to. Now, Brambles operates around 345 million pallets, crates and containers across 60 countries. As I said, the biggest in the world. Yesterday, it said it was pushing through price increases to customers. It could do so, and that meant it was upping its full-year revenue guidance. So things can't be too bad. Brambles' share price actually jumped 8% on the news yesterday, but I still just get fascinated by 345 million pallets, crates, and containers.
Do you need a moment just to settle yourself to calm back down? I've never heard you so excited, even by your normal standard of pallet excitement. That was next level.
On the pallet meter, I'm at a 9.
Yes, yeah, and it's only a 5 kind of scale, so that's pretty impressive. Now, Sean, moving on, the ACT has joined New South Wales and Victoria in scrapping 7-day quarantine for household contacts of COVID-positive people.
Yes, great news for people in Canberra. All quarantining for overseas visitors will also be scrapped. There was a big jump in COVID cases in some states, though, yesterday. Both Western Australia and Queensland recorded more than 9,000 cases. Tasmania recorded nearly 1,500 cases. New South Wales recorded more than 17,000 infections, and Victoria almost 10,700.
Now, Sean, on Wednesday, it was Whitehaven Coal telling investors how well it was doing, and yesterday was oil and gas giant Santos's turn.
That's right. Most of the fossil fuel companies are having a pretty good time of it. Who would have thought of that late last year during the Glasgow COP summit? Anyway, higher commodity prices and an increase in production have helped Santos deliver a record $2.6 billion in sales for the March quarter. That's up 25%. The company also set a record for free cash flow, up nearly 200% for the third quarter of last financial year. This is another one. It's a lesson, Michael, 101, free cash flow. What is it? It's actually the money available after the locked-in capital spending is done. So it's the money available for discretionary spending. Think of it as you get paid and you have to put some towards your school fees or towards food or towards your rent or your mortgage. What you've got for left over is about the equivalent of free cash flow. These guys have got free cash flow twice as much as 12 months ago. Be nice.
Wow, that is pretty impressive. So I've learned two things so far. We've still got a bit to go, but I've learned two things so far. Number one, what free cash flow is. And number two, you don't like chips. All right. Now, KKR, Sean, the US private equity giant that's leading a group of investors in the proposed $20 billion acquisition of Ramsay Healthcare, said the target company's largest shareholder is supportive of the bid.
That's right. The Paul Ramsay Foundation, which owns around 19% of the company, has indicated it is supportive of the proposal being put to shareholders, if that's what's recommended by the Ramsay board. That is a pretty influential voice in what eventually happens.
Sean, Zip's credit losses increased outside of its target range due to both internal and external factors.
Yes, the buy now, pay later provider said it had changed things around to address the issues, but it wasn't all bad news for the group. We don't say that very regularly about Zip. There was some good news. Quarterly revenue rose 39% and transaction volume was up 27%. Not really sure what to say about Zip's share price. It's about 1/10 of what it was a little over 12 months ago.
Oh, ouch. All right, moving on to overseas news, Sean. And inflation in New Zealand jumped nearly 7% during the March quarter. That's the highest reading in more than 30 years.
Household and household utilities led the rise in prices. Now, the Reserve Bank of New Zealand has already started lifting interest rates. It pushed the official cash rate up 0.5% last week, in fact, and this latest number pretty much confirms that it will keep going. Rates are rising in many developed economies, as we've spoken about, the US, Canada, the UK, New Zealand, not Europe, and not Australia yet.
Sean, the US Federal Reserve's monthly update shows a strong economy.
Yes, the report, contained in what's known as the Beige Book, is anything but dull.
Is that really what it's called?
Yeah, it's called the Beige Book. It comes out every month, and it has a bunch of commentary around what's happening in the US economy. Just a dreadful name, because the US economy is the most exciting economy in the world.
Yes.
I'm not sure why it's a Beige Book.
Oh, God, they could rename that easily. We should suggest that to them.
I'll have some homework and find out why it's a Beige Book.
Yes, please do.
Anyway, the Beige Book suggests a strong labour market in the US, with the lack of workers holding some companies back. Prices are on the rise. We kind of knew that. And the war in Ukraine has added a level of uncertainty. The Fed's interest rate setting committee is due to meet in a fortnight's time. It's expected to up the official rate by about 0.5%.
All right. And Sean, it wouldn't be a Fear and Greed podcast without a mention of either Elon Musk or Tesla. And the company has reported its earnings, and it just goes from strength to strength.
Third quarter earnings beat estimates, and with strong demand for its products, it's been able to raise prices of vehicles that it sells. It was yet another quarter of record deliveries and earnings for Tesla, and quite an amazing company. It just goes from strength to strength. Just like to add something else, an addendum to an item from yesterday. Remember we talked about Netflix subscriber numbers and that they'd fallen during the March quarter for the first time in more than a decade. Now, that announcement was made after the market closed. When it opened, Netflix's share price fell 35%. That's the equivalent of $50 billion being wiped off the value of the company.
Oh, that has got to hurt for both the company and for investors. That is a very unpleasant day.
Absolutely.
All right. Now, up next, Sean, is the Fear and Greed Daily interview with Lawrence Patrick, cybersecurity expert with Zarrilio.
Yes, as we mentioned at the top of the show, all about the dark web and how much your stolen information can be sold on the web. So if someone knows your health details, that's particularly valuable compared to your bank account details or your Facebook logins, things like that. So Lawrence Patrick is an expert in the dark web. We did not actually ask him why he's an expert in the dark web, Michael.
We'll have to get him back on and ask that. It's a fascinating chat and actually just a little bit scary as well.
Totally.
All right, it's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Friday, the 22nd of April, 2022. Make sure you're following the podcast and join us online on LinkedIn, Twitter, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.